Greetings, friends and colleagues. It's Sam Collins, the coding and billing expert for Chiropractic. You, as a professional, of course, most importantly, and of course, with ChiroSecure and HJ Ross. A lot has been said over the last few months, this year really, on what's going on with credit reporting and medical debt collections. I want to kind of give you an overview of that and also kind of start you to set yourself up for some best practices. So let's go to the slides. Let's get right into it. Let's talk about what's going on with collections of medical debt and credit reporting. Well, obviously, medical debt can be an issue, and a lot of us use credit reporting as a way to get patients to pay their bill. However, as of January 7th this year, the Consumer Financial Protection Bureau finalized a rule that said that you will ban medical bills from being reported on credit reports used by lenders. So, as a way of protecting people, I think in many ways a pretty good thing because sometimes medical debt, particularly on the medical side, chiropractic, is it that big? Probably not, but I think it was always a tool that we had. Well, it prohibits lenders from using this now to go against a person's credit reporting to get a loan, things of that nature. Kind of that was helpful though, because on our end, if we did report that, in order for them to get that off of their credit report, they'd have to pay the debt. So it was kind of one of those little things that was a tool in our tool belt to kind of force that. And what they're saying now is, hey, January 7th, we're not going to allow it. But hold on, in July, the federal court in Texas vacated the rule. So you're thinking, okay, so now can we do it? Can we not? Well, technically, federally, the rule is moot. So therefore, unless your state has a rule, then you don't have to worry about it. You can continue to report to the credit bureaus such as Equifax and so forth. However, let's keep in mind that's the federal rule. There are still going to be some state level legislation that can do it. And numerous states have enacted laws to curb medical debt reporting. So pay attention. I'm going to give you what those states are, but also just let's maybe avoid getting ourselves in this place to begin with. So California implemented it January 1st, and it has nothing to do with the federal law. A provider of medical services can no longer report that debt to a credit bureau. In fact, the credit bureau won't accept it, frankly. So if you send it, they're just not going to take it. And what California did also is require a statement on financial agreements that says we can't report the medical debt. So that kind of almost thinks, well, that's going to put a patient like, oh, I don't have to worry about paying it because it can't go against my credit. Well, that's sort of true, obviously. However, we have to be careful because why did we get there in the first place? So California, big state, a lot of people live here. Obviously, you have to have some issues with it being there and put a statement on the form. Here is that statement. And it says, and this has to be on all of your financial agreements, including medical liens for personal injury. It says a holder of medical debt contract is prohibited by section 1785.27 of the Civil Code. And again, that's California Civil Code, from furnishing any information related to this debt to a consumer credit reporting agency. In addition to other penalties allowed by law, if a person knowingly violates this section by furnishing information regarding this debt to a consumer credit reporting agency, the debt shall be void, unenforceable, which means if you do it, the debt is automatically to zero by law. So don't mess with this. Don't report to credit bureaus. Hopefully, many of you never reach that point, but California pretty strict. You also have to have this onto your financial agreement. So if you haven't added that in already, please do so. If you're a network member with me, for California in particular, reach out to me. We certainly have some ways of having forms for you to do this. However, there are other states that have enacted their state laws. So these are in alphabetical order for the most part. I think I have one of them out of place here. But it's Colorado, Connecticut, Maine, Delaware, Illinois, Maryland, Minnesota, New Jersey, New York, Oregon, Rhode Island, Vermont, Virginia, Washington. If your state is listed here, cannot report anything to the credit bureau. Now, does this put us in a tough position? I think in a way, because obviously if someone owes debt and they know it's going to be reported to their credit, they're more likely to probably pay that debt and have less problems. Now, realize medical debt is also the last thing people pay. And it's because most of the time we don't report it. And so therefore they don't put an importance to it because it may not hurt their credit. Keep in mind though, even the states with this, hearings and appeals are very likely, and federal courts may challenge it, and it may go vice versa. I'm going to say let's put in place, not worrying about credit reporting, if you will. I don't think that's not a tool that you might use if you're in one of the states there. But let's make sure that you understand a lot of it's already have been occurring for a long time. Since the spring of 2023, major credit bureaus, this includes Equifax, Experian, and TransUnion, have already stopped using medical debts under $500. So if your debt's under $500, frankly, they aren't going to do it. Doesn't matter. Okay. And then certain industry practices like delaying reporting and removing paid medical debt has become a lot easier. It's an easy dispute if there's medical debt. So, what do we need to do? What is the best practice? This is really what I want to get to. I'm not a big fan of having medical debt if you can avoid it. And there's ways of things to do that I want to speak to you about to kind of start to set yourself up. First and foremost, I find that when people need care, they pay for it. So having more of a cash practice, even if you're using insurance, should there be a cash practice? Sure. Collect what you think the insurance is not going to pay on the first visit. If the patient's going to give you a problem with that, I'd rather know it now than later. Here would be my point. I would rather not treat you and not get paid than treat you and not get paid. So keep in mind, set up a good faith estimate so people know what is going on. This is part of the No Surprise Act anyway. So you should already know, let's face it, do you bill that many insurances anyway? Everyone thinks you bill a lot of insurances. We don't. We don't bill that many insurances. There's probably 5 to 10 at most for all of you. You want to start to look at, well, what does the average one pay? What is the patient's out of pocket? Collect that at time of visit. Here would be my takeaway. If my bill is $100, if I'm not sure what that plan is going to pay, I'm probably going to collect at least 30%. So $30, maybe even a little bit more. I'd rather collect a little more because I can more easily refund the patient or give a credit than chase after them. Because let's remember, a $20 or $30 copay that you don't collect each time they come in after 10 visits jumps up to $200 or $300. All of a sudden now, the patient has a problem paying it. People, when they pay $20, not a big deal. But when you're having to pay $200 or $300, so start to put yourself in a position, collect at the time of visit. The only place this is problematic is large debts, such as personal injury. But if you have a large debt with personal injury, are we trusting the patient on that one, or do we work out some deal with if they have MedPay or PIP or their attorney? Do we have a lien? Do we have some type of what I call the lie on paper or letter of protection? But we want to put things in place here because what I want to avoid is getting to the point of collections, because you're going to see consumer wise, medical debt will probably no longer really place much of a burden. So I would suggest let's start putting ourselves in position, collect at the time of the visit, estimate it. If you estimate a little high, easy to refund. Estimate a little low, a little collection is not bad. What I find happening is people allow that debt to accumulate. That's when it becomes a problem. So best practice, set yourself up with a good, sound financial agreement. The patient knows what they're paying up front. Have them pay their portion at the time of visit. So there is no statements or billing we have to send. I would inform a patient, we don't send out billing. We just collect at the time of the visit. Therefore, there's never going to be an issue. So this is Sam Collins, your coding and billing expert. If you want some one-on-one help, see me at HJ Ross at the network. I help you there. If you're a network member, reach out to me. I'll send you the information on this with the type of information that needs to go on the form. Until next time, my friends, take care.